Welcome back to the channel. We got a lot going on this week. In particular, the SP 500, the Nasdaq 100 look to bounce, and I'm gonna tell you exactly what I'm doing this week, preparing to trade and how I see us moving. Now, I want to start off the gates. You have a lot of news coming out. This is all this week happening. Friday, lots of news in particular. You're going to see a lot of it heat up around Monday. Obviously, today is Memorial Day. You got a holiday going on. Tuesday's going to be kind of slow, but all the data starting Wednesday and then heavily ending the week on Friday. How do we see this happening? We're back at the casino with our man, Jerome Powell. Now, what I want to look at here before we get into those indexes are some big signals that we've been looking at here on the channel over the past few weeks and even months. And a lot of these signals came out. We were showing the possibilities of getting that recession. And people were saying, Tyler, just because we're bouncing, does this mean you believe we're done with that pullback? And I want to address those questions right now. So what I want to highlight are some of the big indicators, and these is going to be a daily and 1 month chart. Right here's a 1 month chart. This is the 30-year yield. Now you can see this goes all the way back to 2000, this trend line that you've stayed below this. You've been rejected. You couldn't even make a higher level on this range so you can even test it, but you tested it around May 2nd this month, beginning of the month roughly, and then you got rejected coming back down. That's a 30-year. Now if we break out of this, that'd be very indicative of a big problem with inflation and the value of yields, obviously, in that department. Going to the 10-year trend, and these are all trends that we've been watching for some time. This was a 26-year trend starting out about right here in 97, and then about a 40-year trend going back to 87, 86 range here, all the way down as we speak. So you can see the major trend right here gets broken roughly in January. And then you can see the 26-year trend, which you broke through right here, end of April going into May, this current month right now. Now, what's happening? How are we moving? What are these indicators pointing us to? These told us that inflation was getting out of control. Now, these are going to come into key priority areas of longer term indicators. These are showing that the inflation problem is there and that I don't think we're out of the woodworks. Now, when we come over to something like the Nasdaq, this is where things start to get interesting and where you start to really understand what's really happening. Now, over the past few months, you've seen that pullback happen, and this candle right here looks like you're going to start getting a little bit of a bounce to the upside based on this monthly candle. Now, we're going to come back to like the 15-minute and show you some intraday charting and how and what is actually happening here. Now, when you come in here, you can look at tech getting that great bounce, and it does look good. I'm not going to lie to you. As we zoom in here, you can see as we speak, you're breaking through key levels here at roughly 12.6. Starting this Memorial Day off, futures are open. You can see they're already responding great as well from that breakout that you did have on Friday. And it's looking like you're going to open up Tuesday morning to the bullish side of things up to 13.5. Up to 13.6 on the Nasdaq. Now, obviously, I think 13 will be a little bit of a resistance, but I believe you're in an area of liquidity, as you can see back here, that you just trend through this area and cut through it like butter. So if we go back and just show you how you traded before, you would come up, touch this area, straight down, straight back up, straight down, and then straight back up. You saw a little bit of chop here in this region right here, which is about 13 up to 13.1. But I don't even think that's going to matter just with the strength that we have right now and with the amount of news coming out right now as well. I anticipate lots of volatility. So you're wondering, you're saying, Tyler, are we going straight to 13.5? Now, I'm going to be trading this if we open up Tuesday morning to the bull side of things. And I'm going to be looking at a few stocks, which I'll mention here near the end of the video as well. So I'm looking for a test of this range of 13.1 in a hurry. And then if you start breaking above this range as well, you have to test that 13.5, 13.6 range. And I think it would just be one of the easiest calls and trades possible, seeing the touches that you had here. And then if we just come back down to previous levels, how did we trade going into Friday? You came back to the previous range of 12.6, which I called out and told everyone in the previous videos as well. And look where you ended on Friday, about right there in that range, getting a breakup into the end of the day. So overall, you look great, and it's going to repeat history here on the Nasdaq, representing all tech. The S&P, what are my thoughts here? And I know this is where people are going to have a lot of questions. The S&P, sorry, the chart's a little bit messy because I've been keeping up with what we've been looking at. here on the videos. Now, you can go back and look at this data if you want, but I think the area is going to be pretty much the same. And the S&P you're not going to be able to see because I'm looking at SPY. I'm not looking at the S&P futures. But as of right now, where am I targeting? I'm looking for that push up to 43 right here, 430 roughly. So if you open up as of right now, you would definitely open above this range and you'd be trending in this area where there's low liquidity. Again, you can see here, you come up, touch, straight back down. You come up, touch, straight back down, come back, a little bit of chop in that area, and then boom, straight back up. So once you get above this zone right here, it's been a clear shot up every single time. There's no reason to overcomplicate this or overtrade this. It's very simple when you're looking at these key zones. That's what we had them marked out. So we even in the video, we had the 405 to 407 range. After that, it was going to be a clear shot up around the 413, 415, and look, it happened. The same previous lows. Now, as far as stocks and things like that, I want to give you a quick look at another indicator we were looking at for that recession movement. Now, going into this is junk bonds versus the 20-year safe bonds on TLT. If you're not familiar with this chart, we've gone over this a few times as well. And this chart has remained pretty steady over the past 20 years if you look at how this charts out. So if we go back roughly to 2008, you can see how this is playing out. I'm sorry, 16 years, about 16 years total, 16, 15 years coming in here. So 2007 coming into 2022 right here, you can see every time the junk bonds in relativity to the TLT bonds hit this range, you have a pullback coming in. But look at what's happening now. You've actually had that breakout pushing up there, and you've had that breakout basically in the end of March, pushing up into May right now. What does this mean? In my opinion, this shows the weakness in the actual bond market and why yields will continue to go up. Why? What does that mean? So longer broad term, I am still a bear in the grand scheme of things end of the year. Short term, I see upside. Why do I see that downside in the long term? Let's look. So junk bonds represent very risky assets. That's the easiest way to describe these. They're essentially the riskiest of the risk, hint junk bonds. So when you're betting heavily on tech and you want to see a risk on scenario in the market, you look at junk bonds. If they're going up, it's a very risky market. So right now, even with the market right now getting some sort of bounce, people are betting heavily on these junk bonds. So you can see a nice little movement there. Going over to TLT, the safer bonds. People aren't buying these as much. Now, typically you see slower movement like this, but it's worth mentioning. Look at how much slower these are moving in comparison to something like J and K. J and K is going straight up. So people would rather buy the riskier assets than buying and betting on our economy, the safer assets, which typically if you get pulled into a recession or some downside movement like this, you want to play TLT to really secure those profits because this has always been the play. But it's worth mentioning you're still in the downtrend when it comes to TLT, which signifies that most likely this giant pullback is not over with. And if you can see, you're still in the overall breaking back into that downtrend. So right here, I think this is a huge indicator that there's not a lot of strength in the market as we speak. We're seeing a lot of volatility coming in, but that doesn't mean you can't trade that volatility to the upside. This shows me in the grand scheme of things, we are still bearish and there's not extreme confidence in the market. It's also telling me you're probably getting some short covering on these movements as well. And that's what's really taking place to see all this crazy movement to the upside as well when it comes to something like the S&P. But I want to show you a few of the stocks that I'm looking at if we continue to break out to the upside. Now I'm looking right now, Amazon and Google do have their splits coming up. Amazon beginning of June, I believe it's like the 6th or 7th. Looking here, if you break above this 2300 region and you can hold above it, chances are you're going to push up to 25, maybe even start filling that major gap level that you have up here as well, all the way roughly to 2800. But target number one has to be right here. This is target one, 2500. Again, if you break above this key region here. Number two has to be over to Google. Again, we're looking at this. You're looking for that key touch back up to this range level, back at roughly 2340, 2330. That's what you're looking at. I mentioned to everyone in Discord. I told people on Twitter. If you're not following Twitter, the link is down below. You were probably going to start pushing back up to 22. You broke above 22 and held about 22.5. Now you're pushing up. You're going for another 100-point move back to the upside. There's splits coming as well. Another big one. These are all the big stocks in my opinion. If they get above these ranges, they're going to move in a hurry. Tesla has got to be number 3. If you're looking at this region, you're looking for 850 all the way possibly on the low end side, 840, 845. Quickly moving about $100 from 750, 760 to that range in a hurry if you open up green at all. Now, when you come to something like Nvidia, Apple, all these tech plays, these are just plays that I'm liking right now. They are very beaten up and they have easily enough room to come back to these previous highs that you're facing. And that's why I'm looking around 200 to 205 on Nvidia, possibly getting back to 212, 211 in a hurry as well. But you're seeing nice rounding. This is all very good. Earnings were good as well. Dividends coming up. So I do like these plays, but it's all dependent on how the indexes open up tomorrow. And as of right now, indexes do look relatively strong. As well as looking at Bitcoin, you can definitely see Bitcoin's made a very hard bottom. I told everyone about this play as well. As far as risk to reward, Bitcoin definitely had the favor to the reward to the upside based on holding this 28, 29K level. It's held time and time again, and it's always gotten volatile moves back to the upside. So you're looking for a push roughly to 37, 36K at minimum on Bitcoin from this move if you got in around 28, 29K. But that's all I got. Have a good one, traders.